Hello, I'm Simon Henry, the Chief Financial Officer of Royal Dutch Shell. Today, we announced our quarterly financial results. Let me give you the highlights. Our first quarter 2015 earnings were $3.2 billion on a clean current cost of supplies basis, and our earnings per share decreased by 56% from the first quarter 2014. Our cash flow generated from operations was around $7 billion. On a Q1 to Q1 basis, we saw a significant decline in upstream earnings and higher earnings in downstream. Earlier this month, we announced a recommended offer to acquire BG Company. This is an important transaction for Shell. The combination with BG will accelerate our financial growth strategy, particularly in deep water and in liquefied natural gas. Both of these are already growth priorities for Shell and areas where the company is already one of the industry leaders. This is an exciting next step for both companies, and we're looking forward to being able to update you on that when the transaction has closed, which we expect in early 2016. Returning to our first quarter results, the upstream underlying earnings were nearly $700 million. Now that's a decrease of some $5 billion from a year ago. This was a large move and includes a $4.7 billion reduction for the lower oil and gas prices. Our downstream earnings were $2.6 billion. That's 68% higher than year-ago levels. Now, they benefited from stronger refining margin environment, but also from the underlying operational performance. Now, we set out a program to moderate our investment spending in 2014. That was with a reduction in both the headline and the organic spending. We continue with that approach in 2015. Now, we now expect our total investment spending this year to around $33 billion or less. In other words, that's a $2 billion reduction from the $35 billion ceiling on investment that we set out at the start of this year. Now, this is a dynamic picture. And so what we see today has included a series of pragmatic decisions on new opportunities. It was also good to see progress on the operating costs, excluding identified items, included in the first quarter results. These fell by almost $1.1 billion, or around 10 percentage points, on a Q1 to Q1 basis. This was around two-thirds from exchange rate movements and around a third from self-help. So there is more to come here. Our asset sales, divestments in the quarter, they totaled just over $2 billion so far this year. Now, dividends are our main route for returning cash to shareholders. Now, the dividends were confirmed at 47 cents per share for the first quarter and $1.88 per share for the full year of 2015. Returns to shareholders, dividend declared plus buybacks, they were $14.4 billion over the last 12 months. Now, all of this underlines our commitment to shareholder returns. Thank you for listening.